And no one expected that to happen. Did you expect that to happen over the weekend?
Not over the weekend.
No.
So, I mean, I'm not surprised that's where we're at.
And then kind of, where these numbers fell before the report, where they're after the report, and then, like what opportunities does this provide now? You know what I mean?
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it is Monday. It's a 90-degree with 90-mile-an-hour wind Monday.
I think you're a little slow on the winds. I think it's 100.
It might be 100. I did not get my boat out yesterday. It was, I had no desire to go on a lake because we had this exact same weather yesterday.
Yeah, it's been challenging, I'm sure, in the fields as it has been in, fishing. It's like you got to try to find a little sliver that isn't blowing in there, and I don't mind a little wind, but I mean this is something else for the markets, or I mean something else for the weather. And then we're going to drop off to 50 degrees. It's going to drop off 45 degrees in 24 hours here into the weekend, and it's one extreme or the other in the weather. And I think that's probably got the trade nervous a little bit as well. It already feels like too hot of a summer, although that's going to change really quick. And then we had the China news over the weekend. And then you had the report today that was kind of very surprising in a lot of numbers. So suddenly, this is a different market that we're looking at in grains. And this is something we have been talking about for a number of episodes, is do not give up on the new crop stuff. It's probably going to surprise you like it does normally every year. Look how fast this trade deal stuff's come together. Now, one can argue on who's going to buy what when,
right,
and the details such as that, but it just shows you how fast things can heal up. You look at the England and the U.S. There's going to be many more that follow. Who won? Who lost? I don't even think that's going to be the point. Obviously, the stock market likes what it sees. The grains want to see, we're going to buy this amount on paper. They didn't see that, but then you got a great report today. So what looked to be DOA for the grains, and is going to be this hopeless thing that you're out there planting and not earning any money on. Suddenly, you need a perfect crop not to go backwards significantly. Completely different market than it was last week even.
Unless it's wheat.
Yeah, I left out that part. We didn't have any good news today. It hadn't had good news to it. The entire world is short at every exchange I was reading on Twitter. Every exchange is like either near record short or record short, from the Paris milling wheat to the U.S. exchanges, overseas, everywhere. Everyone is really down on wheat. And you had the world ending stocks dipping for years. We're not at comfortable levels in the world stocks. We're not comfortable levels at the beans or the corn either. Like, it all feels like it could get tight. The wheat is the worst performer. And then the report today didn't help anything. You had breathe new life into corn, new life into soybeans, and then there's wheat. Yeah, and man, we won't even spend very much time talking about it. In the spring before it started to rain, we talked about how it was dry. That's gone away. Although I've been talking to guys out towards Minot, more central North Dakota, it's very dry. The rain looks like it's going to miss, but as long as there's rain in the forecast, a threat for rain, wheat's not going to go anywhere. Then Kansas got a bunch of rain at the very end. So that's where the weakness is coming from in wheat. There's just nothing to drive it higher.
I'm convinced that everyone became gluten-free at once.
You can say this about the protein. The proteins are like even dry or whey or anything full of protein. That's really in favor with the diets. And then, like you say, the gluten, getting away from the wheats and the carbohydrates is really in fashion as well. And you are seeing it in the markets. It's just like there just doesn't seem to be the demand to get us off the bottom here anymore. We've had decent exports in wheat, but if you have we've had decent exports in like beyond that in corn, and you're really not seeing these grains respond. Even the corn, the bull of the bunch, They went down. It went down in July.
It did.
No, it's gone on so long. Clearly they're thinking there's computers involved in algorithm trading. I don't doubt there is. How can you explain basis firming up in beans and corn, finding a bull spread in the front in both beans and corn? The old crop stocks dropped. New crop stocks dropped. Any other world, they're bull spreading these markets.
Right.
For some reason, they're very intent on selling the front contracts, and this is including in July beans, for absolutely no reason. What's the incentive other than to press a trade that they had going? Even the short corn that they started developing here looks wrong all of a sudden. They had new crop convinced it was going to be 2.1, and we came out at 1.8 today. There is zero room for error in the corn. It's at 181 for the yield. That's a high yield. So all of a sudden, you have a very different look to the market. Now, one can argue on the demand side of stuff that looks like it's going to be hard to maybe live up to the hype on the beans and the corn. But look at the trade deal that happened over the weekend. There's no details as far as demand, but that shows you how fast that side can change. So all of a sudden, we have this crop, and we need everything perfect every day. Now, and they've run it down kind of into this. Beans have found a bottom here a little bit earlier. So completely different look to the day. I'm going to be on the phones all day tomorrow talking about courage calls, going over numbers. Do you want to, entertain the thought that we're going to own some courage calls? Because the premiums are still very cheap. Beans got a little more expensive today, but still very affordable. But that's what I love about commodities. One door closes, another opens, and that's exactly what happened in the grain report today.
So we dove deep on courage calls on Thursday's Insider episode,
Yep.
But that's not a large percentage of our listeners yet.
No.
So maybe just hit the highlight on courage calls. We're not going to hit the prices and those things that we did on Thursday.
Yeah, the 460s were very...
Just talk about what you do with a courage call.
Okay, so when everybody doesn't like the grains and it's kind of run down into spring, and that's kind of what we have here, surprisingly, they've run everything down. So when they give it up before it even starts, like the last 2 years haven't set up like this at all. We've been falling from higher levels with very questionable fundamentals. This year, now we're at lower prices, our back's against the wall already for a super high yield. We're not sure we have enough bean acres. So what courage calls are is, and you'll find guys arguing against it. What it's supposed to do is the new crop that you haven't marketed yet, when it gets to the price levels that you buy, let's just use 460 September for an example. It gets to those levels, you can market your physical grain and do one or two things with the calls that you bought very smartly at the bottom. It could be added to your sales. So what you bought we'll keep using September 460 calls for an example. You bought them for 14 cents. Suddenly they're at 35 cents and we're at 470. So you have, now you can short 470 hedge due arrives if you're confident in your yield. And then you could take your 17, 18, 19 cents of profits there and throw it on and almost have a $5 corn price. Or you could sell your 470 corn, and then you have your upside wide open with the call. So you're committing to that price, but you still have your upside open. Now let's look at the other side of it.
Just real quick though, because you left part out. If you do sell there at 470 and keep your upside open, there is a cost to that if it doesn't keep going up. You would lose that premium then. Yeah. So you're not adding to your to get near $5.
Yeah, that's a choice you're going to have to make. Do I want to have my call premium added to my existing sales? And of course, it'll depend on weather and other things, politics. Or do I want to let it ride with that call? And, obviously in art form, summer things change very quickly. And that's just a personal decision guys have. And I would say when guys do this, most guys take that call profit too and bank that and put that on top of corn sales. Now you're going to find the hedgers and the true hedgers saying you already grow it. You're long on you're already going to be long on paper. You don't need to do that. Very true. You could buy this 14-cent call and waste 14 more cents. Mm-hmm. Do you need to do it? You absolutely do not need to do it. But what guys find is when you're in the situation where they have given up on a market, can't go up, all of a sudden could go up, but it might be really short-lived and really confusing, which is going to be this year. that it really helps them market better. And they're willing to risk that 14 cents on buying this you're basically buying this weather and the forecast here. And you can already see with the swings that we're seeing that we have just extremes this year. It's too hot or it's too cold. And it could turn into the hot pattern and stay with us. We don't know. But it's at least an idea to put out there that, hey, I can cover the upside. And when it gets there, I can market these levels and have the courage to do so. It's definitely a preference, and you might not have 14 cents on the farm to spare for these calls. Where on the bean side of it's even more expensive and you're out of the money, but it's still not expensive for an entire summer with the numbers we just saw. I think it's 27 cents for $11 calls. They were recently 21.5. So they've been moving up here, and obviously today helped move them up. But it's something to look at and something to consider. Or let's talk about not buying courage calls, just getting these market levels, getting these orders in at hedge shoe arrives. What price levels are we looking at now? Today, I feel changes the game a little bit. We could quickly go up, but it might not last long. So you have to have those orders in. You might want to watch more of the weather and then get those orders in. Meaning if it gets really dry on the front end here, like 2012, and doesn't rain, maybe don't put those orders in right away until it starts raining. Or have a plan when there's rain in the forecast at the beginning of June or into mid-June. I'm gonna do that. Either look at hedge to arrives or maybe I'm gonna short futures. Whatever you're gonna do, start getting this plan ready together. But finally, Ryan's busy guy.
Got to put some orders in.
Yep, exactly. So you're just preparing. But what I really like about today is the report came out and really breathed new life into this, because now the bears have to have perfect weather every day in a time period where usually there's a pretty good scare, and I think it changes that dynamic completely. And then we haven't even really touched on the China-U.S. trade deal. That was already a big tailwind before we even opened the market this morning. And all of a sudden we went from this ultra bear, never going to go up again, to, maybe there's actually not as much around as we thought.
Maybe it will never go down again.
Yeah, maybe it'll never go down again. We've completely flipped the switch into bull mode, as you do every summer, because we're going to run out. But I'm happy that now we get a chance to breathe and look at the markets a little bit and make some decisions on some of this stuff instead of this ultra bear, no trade deals. China's going to hate us forever. We're going to hate them forever. It just is completely the opposite today, and it changes that quick in commodities.
Well, and how many times have you said never count beans out? And after today, I mean, beans look solid. The numbers look solid.
Yep.
I'm not saying they're never going down. They're definitely going to go down at some point. You're going to want to hedge it. But
yeah, they said this thing was going to get bear spread, and there was going to be China wasn't going to buy anything after even, January. And we've had very steady demand, and basis is rising in soybeans right now. So of course they bear spread it. Why wouldn't you?
Right.
But it's not this bear that everybody had in mind. Where corn, I feel, is the exact opposite. We've had outstanding demand. Things have looked as strong as you can possibly look in corn. And this is the weakest we've been in the front end essentially ever for these numbers. 447 is wherever it ended today. It was down in July and up in December, which makes no sense. But it hasn't made sense. It started about 2 weeks ago, and it's only accelerated. They're really pressing the short side of July for no reason. And corn feels like an underpriced market, but it might not ever get to the true price. Is it going to happen in basis? It's certainly not happening in spreads. The spreads are definitely going the wrong way. This is not a look that we've ever even seen in corn. You don't have a declining supply with a declining outlook for new crop and then have them heavily bear spread on record demand. That's just a combination that's never existed. Certainly not at 1.4, which they would have been correcting the ending stocks by now if there was going to be corrections. So all of a sudden we're at 1.4, even less than they thought, and they want to run the front of corn down. I think there's opportunities there. That you'll have to call us for. We'll get into a little more details there, but that's been a rough market especially for the July corn bulls. Don't ask me. Don't ask how I know. I know firsthand experience. It's been about as rough a ride as you want, but I wouldn't give up on the corn front market yet either. Again, the beans have new life. We're not going to make a policy here. We'll talk about wheat when there's actually something to talk about.
Okay, I got something to talk about.
What's that?
Well, you had mentioned, I think last episode, about your new favorite spread being long cattle, short wheat.
Best spread ever.
Joking about it.
Yeah,
right?
No one's in it, of course.
Well, haha, you say no one's in it.
There's probably people in it.
I took the opposite side of that, John, in options.
There you go.
So, I figure cattle's probably got a long way to run because I bought a couple puts today.
Yeah.
And wheat's probably going to $3 because I bought a couple calls today.
So you did the opposite.
I did the opposite of the easy spread. And
How's
that's
that going
my contrarian nature.
How's that going for you so far?
Well, let's say after today, it's not looking great. We might only give it an overnight and give up on it. But I don't know. So I'm bringing up some more things. So you thought 218 on June cattle might be a high. Might.
Yeah, I think
so. We were really close. That's what I was looking at when I went at the cattle puts.
And the news, of course, today was the screw worm, which I have a hard time saying that for some reason. The Mexican screw worm is back, and they shut down the border. And I don't remember. It was one of the agriculture secretaries. They shut it down. There's no more cattle imports for feeders. Thus, feeders were up $6. It actually opened up 2 or 3 in cattle, cooled off in live cattle, never really recovered from the early highs, where feeder cattle took it upon themselves to make fresh highs. We're in the $3 now. So we're really ratcheting up risk up here. That was bullish news for sure. We've seen this look before. It's been closed before. Is it going to affect it a lot? I don't know. I mean, I don't know where the demand stops in all this. Are they going to darken plants? The cattle market is a lot of risk. That's what I'll say about the cattle. Hedges, speculation, everything's got a ton of risk. But it caught a big, giant story again today, and boom, cattle starts out strong out the gates. And, they say it's going to go up forever. We both know that's not true, but...
I mean, just because we know it doesn't mean that it's not going to go up forever. It doesn't mean it can't go up for a long, long time.
Yeah.
And right now, bad news, a slight little bump down.
Yeah.
Good news, it is a rocket ship up.
It's taking like one day off a week. I think last week it was twice. I think Wednesday and Friday were actually down. June wasn't down. But cattle, it's the market that doesn't stop. Of course, it will be done one day, but caught more bullish news again today. And it just doesn't want to stop. And, like long cattle, short wheat, as a joke. But it's still, they're 2 different directions every day. The market said just don't want to do anything different. There's no reason to think that it's going to let up. Wheat will find a bottom one day. As it often does. And probably bounce pretty good off there. But from what level is our cattle going to be done here? I'm just happy that the grains was pretty, it just looked like a pit that we couldn't dig ourselves out of. All of a sudden, this trade deal gets done. To my personal opinion on it, it looks like everyone's tired of the trade stuff, both sides. Maybe bit off more than they could chew, and they're all looking for off-ramps. It looks like everybody in every trade deal is the same way. Expect a lot more to go through. Who gained, who didn't gain, what was lost, that'll be debated for months and years.
Yeah. Oh, it won't ever be so. Everyone's going to claim they won or they failed or is the so-and-so failed. Or
It does feel like the Trump administration's backing off a lot of the aggressiveness of what they wanted to do. And that's part of negotiations too. So you're gonna have both sides say they won. It doesn't really matter. For me, I want it to be more clarity, and I think we have more clarity. There's 90 days in the China-U.S. stuff to come to some sort of agreement. They already had phase 1 in place. It would be great to see the grains being a part of this. Wheat doesn't think it's going to be, but honestly, I think that would be one of the first places China goes is wheat. We're the cheapest in the world. They need wheat. It only makes sense. Corn stocks are pretty low. That's probably also an area they'd be in. And they have to buy our beans. Granted, we have the largest South American. So it makes sense that eventually will be in print. And you will see some purchases, which only makes marketing that much harder. What if it's like phase 1 in 2020 where it's really aggressive? No easy answers here, but at least the grains have a different look. They've had this really hard, very unpredictable look. I've liked beans for a while because anytime their acres are near nothing and you give up on, especially a crop like beans that can change so quick, it's a much smaller crop than corn. Things change quick, and that's what you're seeing in beans right now. Now, I'm not saying run out and buy beans. They've actually come up 60 cents recently.
Right.
So, but it's a different market, and there's probably going to be more opportunities. I'd say keep your risk limited in these markets too. It's very, very punishing. Look at that July-December corn spread. It looks like a slam dunk. Everything fits. The news has been good every day, and the markets can remain irrational a lot longer than you can remain solvent. Perfect example of markets not doing what they're supposed to do. You could say that about the July-November bean spread even. So it's not an easy market, but at least it's a market with more opportunities than we've seen in the recent past. A lot more.
That's the best part to me is there is actually things you can look at and say, oh, I might do that. Even if you do something stupid like I did today.
Yeah, even in options, something that we don't talk about often is, so let's use, for easy math, $11 September bean call, and you want to get involved. You can pay 25 cents. That's what you risk, 25 cents per 5,000 bushels. So, right around that $1,300 mark. And I already forgot what I was talking about. So about $1,300 total risk. But you can see weather for a few weeks. You can see the June report. You don't have to go to zero. With time there, the whole option is not going to go to zero. So you don't have beans go down 27 and then you lose 27 cents. That's futures. So you can buy something for 25 cents and risk. You can have a mental stop. You could have a physical stop if you wanted. You could have I want to risk 14 or 15 cents on this trade. So all of a sudden you're part of the bean trade for $700, or at least that's what your risk is. So even if you front all that money for the calls, you don't have to risk it all. You can see what the weather's like. You can see if attitudes are shifting. You can see if the China trade deal is getting better or worse. And you can say, hey, I'm gonna risk about 15 cents in this trade and then own it. But I do know this is the window, and we're there now. I say May 12th. Although sometimes when the market's running up and then it's really good plantings and we're falling, and we can fall from higher prices until there's a weather issue. This year we ran the markets down basically into plantings. Oh, and quickly we'll go over the numbers for plantings.
Before you do that, I just have another example on the premium when you're talking about the options, because I did have some bean puts on last week.
Okay.
And I mean, they were purchased very cheap. I think it was $0.015 was what I paid for each of them.
Yep.
I mean, the bean market's been all over the place in the last week and a half that I've owned them.
Yep.
Well, I got out of them today with beans up 20 cents. I got out for $0.01. Because the volatility came up, it was up 20 cents today. So even though the market went 20 cents against me, it only cost me half a cent per call or per put to get out of them. And so, but if it would have gone the other way, if the report would have been worse, if it wouldn't have been, it would have been a bad trade deal or trades off, they could have been worth quite a bit.
Yep. And that's this time of year. This is where implied volatility really starts going higher fast. Now we don't know what we have for ending stocks with weather, so it's going to be on edge, and obviously they price options accordingly. They're going to want more, because of the uncertainty, and that goes into the pricing. So this is where you start to see the implied volatility really spike. Then you get a hot and dry forecast for a couple of weeks, and you see it go nuts. That's those huge implied volatility spikes, meaning how much they think it's going to move in a certain time period. So don't overcomplicate it. Implied volatility is what they think it's going to move. And so when you get into these weather windows in summer, they can think it can move a lot, and they're correct in that assumption because oftentimes it does. So you can, what you were saying is these option prices might not go down at all until they see more weather. We could come off 20 cents in beans and still be very near where we bought this bean call just on implied volatility going higher. Now, that's not that common, but the point is we're at very low implied volatility going into a summer where they've run down the price, gave the crop no chance at rallying, and all of a sudden we get a report today and we get a trade deal, a couple fall in place, and it doesn't look like the same market as that doom and gloom even 2 weeks ago. And so that's what I like about commodities. It shifted quick. The implied volatility, I would think, is going up. I'm going to be really busy on the phones tomorrow, getting a hold of guys. I know you're busy in the fields, and asking, what do we got? What do we want for coverage? Are we going to be involved in this? Are you just going to have orders for hedge to rise? But we're going to start planning because we finally have a market that we can maybe get better prices on and hedge. That's the whole point of it.
Absolutely. Okay, now you can share the planting numbers.
Yeah, those just came off, and you're going to hear them by the time but here's where we're at. Beans at 48, just flying. 37 is the 5-year average. Corn's at 62. I don't know what number they're expecting. The 5-year average, 56. I don't know how you spin delays into your 6% ahead of the 5-year average. You're just not going to be able to. Plus, everything's going in a million miles per hour everywhere, except for parts of Illinois, parts of Ohio, in parts of the East, Indiana, there's parts. But even with Illinois, one guy's going a million miles per hour, the next guy hasn't turned a wheel, 20 miles away. It matters where you are in those states. But if the West will be planted, I meant you just can't get better weather than we've had other than the million mile per hour winds for the West. And that's been the only complaint is the wind. Otherwise, everybody's going, and you're going to have guys in bad spots, but just overall, everybody's moving. We
are going to need moisture at some point. I mean, just looking at our backyard, especially with this wind, that would be real. But we're supposed to get moisture this week, so I don't want to discount it. I'm not saying drought's coming. Buy your calls, but
if we don't get, that's all you need is just a threat that it's coming, and it could change things. And the markets can go up for 3 weeks and then fall to new lows into harvest. It doesn't mean because it gets hot and dry that's why we hedge, that it's going to continue to go up in 2012. And that's a big mistake guys make. It's that it gives you the opportunity for better marketing. How you handle it is what separates the guys that do better than the guys that struggle. Meaning, we talked about courage calls. Are you just going to just flat out have targets that are profitable on the farm, not listen to everybody saying it's going to go $3 higher, and you just simply market? Those guys will do better than the guys that do nothing. Then you're going to have the year like 2012, where August was a high. That's exceedingly rare, but you can't rule that kind of stuff out. And I was going to talk about the dehumidifier at the lake, as dumb as it is. Still, it's pretty moist downstairs, and it's by a lake, and I think I've emptied that once. Minnesota's dry. North Dakota's dry. Everybody's dry. Nebraska's certainly dry. Even where it's gotten recent rain in Kansas and everywhere else, drying out very quickly without a doubt, unless there's a bunch of moisture on the way. This is going to be a concern in the days ahead, especially with these numbers we saw today. But again, I'm glad that they weren't the devastatingly bearish numbers, and at least we have something to work with here.
Agreed. Well, John, we should probably wrap it there unless you have anything else you want to add.
No, I wouldn't say these markets have been easy. And I wouldn't want to insinuate they are. It's been very challenging since September, the way the money's flowing in and out of grains. You can't count on anything. You can't count on fundamentals driving a spread. You can't count on the cash market even. It's a really flighty market, and it moves one way and then it likes to move the other way. There's no follow through. You can't say, hey, we just had a nice breakout on the chart and it's going to follow through. You can't have any confidence in anything in grains. And it's been challenging for marketing. And so far, doing nothing's been the right answer, unless you got, the 480 something for corn. But even now, there's a very good chance we see that again and they'll get another shot. It's how you handle it in the summer, usually that makes or breaks your marketing plan. So we'll try to cover that, step by step. But still, this is a very tough environment. I don't think we want to insinuate it's been easy. It's been a million different looks with a lot of politics and trade deals and reports that don't make a lot of sense. So just hang in there and try to do the best you can here all the way into the end of June. That's usually where a lot of opportunities are.
That's the part that I was going to bring up and forgot. So I'll wrap up with that. I do think it is important to remember how the trade deals went the first time around with this administration. So even though we talked real nice today, there's certainly the possibility that the talk next week, tonight, a month from now won't go the other way. So one tweet can change
everything again. But the good news is it feels like we're further down that road to where almost the Russian-Ukrainian, in the end, it didn't matter, even if they bombed the ports, where they shipped the Black Sea ports. You'd have a missile fly anywhere near there and you'd be near limit up at the height of it. Towards the end, markets get exhausted by these back and forth news things. So I feel like it's going to have to be a really big story, and it's going to have to go really off the rails now, where Canada's sitting, Mexico's sitting, and now China, the big ones. You're going to want to get a Japan deal done, but it feels like never rule that out, though, like you said. Right. But it feels like we're getting further along where that's not going to influence the markets like it's been influencing the markets. And they're not going to sit on every single word. It feels like everybody wants to get these trade deals done and move on, like all countries, including the U.S. That's a feeling you get. They're all going to claim victory, and I hope we can trade something else soon, because it's not easy to trade that.
For sure. Definitely. All right. Well, leave your number, John, and let's call it a day.
218-731-1578.
Thanks, John.
Sure.
You still don't want to buy wheat.
What's to even talk about wheat? Wheat is the worst market in the entire planet, is it not?